Hey guys, this is Alex from MarketWise Asia. Thank you for watching this video. This video is specially created for you, the Seasonals Vantage Insiders over here. So as I'm doing this video, today's date is the 14th of August 2023, a Monday afternoon at 1 p.m. as I'm doing this video right now. Okay, so before I kickstart this session, whatever I share, a quick disclaimer, whatever I share right now, it is just for educational purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. I could be wrong. Okay, so just a very quick recap on what I mentioned during last week, okay, public Facebook Live and also YouTube stream over here. So if you haven't watched, I encourage you to go and watch it. You can go find it on MarketWise Asia YouTube and also on Facebook page. Okay, the live stream will be there. And last week I mentioned that for this week, okay, I am anticipating a small rebound over here. All right, because of my proprietary star reversal signal over here, there's a potential chance that it could rebound. Okay, how high it can rebound, I don't know. It might not rebound also. Okay, price can just continue to go down lower. But my anticipation is that there could be a potential rebound. So I want to be prepared for that. And also, I mentioned that, this week is actually the options expiry. This coming Friday, 18th of August, is the OPEX day, options expiry. So a lot of times leading towards the OPEX, right, the market tends to go a little bit higher. So, this could be the week, okay? But whether it will actually rebound, okay, we shall see. But overall, okay, I'm still gravitating towards the bearish side for the month of August and also in September. So back to the stock chart over here, I mentioned this, okay, I think last week also, actually, the mid of August is the time where the overall US market stock indices, okay, will start to go down a lot faster over here. So we are approaching the mid of August. Today is the 14th. Of course, OPEX is on the 18th. So if the bearish, okay, side really do come, okay, it will be I'm anticipating next week or so. But, we kind of prepare what could happen this week also. Maybe could be a short rebound and such, okay? And just also a very quick recap on what I mentioned last week, okay? Last week, I mentioned about the Singapore stocks, okay, the biotech sector and the clean energy over here. So I know some of you, this is the data. I'm referring back to the data over here. I know some of you joined only recently. So I've sent you guys the ETF bonus data for the month of August, the bearish data over here. So if you didn't receive these data, PowerPoint, not PowerPoint, the spreadsheet, remember to drop me an email. Okay, I want all of you to have this data over here. This is a bonus data. Okay, I'm not charging anything. So as I mentioned, right, the Singapore 1st to 31st of August, for the month of August, the Singapore index is actually bearish. Okay, and also the 6 to last week is the 6 to the 13, right? 6 to 13, you can see that the I talk about the EZA South Africa. I talk about the biotech, okay, and also the clean energy as well. So this has been working pretty well. So if you look at the STI, okay, the STI over here today there was a huge sell-off over here. Can you see it's not doing too bad, okay? Can you see that? Yeah, this is a naked chart, right? Yeah. I mentioned last week, right? I said that, if I want to short, I want to wait for a short rebound over here, a pullback. And indeed, there was a pullback over here. And then I shorted the STI index price, actually came back down much lower. So this was a good trade, okay? But even if you do not, go for short, at least the data will tell you to avoid buying the Singapore, market or the Singapore stocks or the bank stocks, because I mentioned last week that, the STI, a lot of weightage are on the Singapore bank stocks like the UOB, DBS, OCBC. So I won't go through all these bank individually, but the three of them has been dropping now, okay? And STI has been dropping today as well, okay? So that was what I mentioned last week. And then the XBI, I also mentioned last week, okay? That I actually shorted the XBI, the biotech sector itself. I entered somewhere around here. There was a sharp sell off, okay, a sharp drop. So I actually took profit on this day, okay, and then of course right now there's a pullback as well. So whether it can continue to drop, it shall be seen, okay. But normally after a huge drop, I would like to take some profit off the table. And also the PBW, the clean energy, I mentioned that it's not doing too well in the month of August too. It is the Invesco Wilder Hill Clean Energy ETF over here. So after my video last week, okay, last Friday was here. Okay, the market continued to head down lower. So all this has been doing pretty well if you actually, shorted or you have your own kind of entry trigger, okay? So what will this week hold for us? Okay, let's head over to the data again. So this week I'll be looking from the day from the 13th to the 20th of August over here. So let's quickly do a quick filter over here. So from the 13th to the 20th, okay, 13, 14, 18 over here, 13, 13, okay, 14, 18, and 20, okay. So it's 14 and between 14 and 18 over here. So it's do a filter over here. There's only a few for this week for you to kind of focus on, a very short focus list over here. So at one glance, the first one, not very common, so we can skip that. Can see that, okay, the gold miners and the silver ETF, it is not doing very well, which means that you should be, avoiding the precious metals and the precious metals miners, okay, gold miners and the silver miners as well. And then also the PBJ, the food and beverage ETF, and the consumer staple. These two are the consumer staple, or you can call it the consumer defensive over here. Okay, you can go through the gold miners first. So the most common one is actually the GDX, okay, XLV. So for the GDX, okay, GDX over here, GDX. So GDX, okay, I do not have a position in the GDX yet. So can you see that overall it is in a downtrend over here, okay, and this was the prior classical support resistance level. This was the prior support over here, okay, and then right now there was a kind of a short pullback, a rebound over here. So I am anticipating that price could come down lower like this, but as of now, I do not have a position in any of the gold miners yet, okay? And also the data also suggests the silver ETF, the silver metal. Can take a look at the SLV. Silver is the weaker one over here. You can see that after a sharp sell off, and then right now price is consolidating. So I'm anticipating the price there could be more downside to come. So again, this is not a trade signal service. I do not tell you when to buy or when to sell. So you still have to watch your own price action, have your own trigger, when to exit, when to enter, okay? Right, so you need to have your stop loss in place also. This is just to tell you what are the sectors or the industry that I'm watching out. So in this week, okay, you can look at the silvers or the gold miners as well. So of course, even if you don't want to go short, at least it tells you, avoid buying the precious metal or the precious metals miners, right? So this is something that you need to be very aware of. Okay, another one that I'm looking is actually the consumer staple and the F&B ETF. The F&B ETF is actually a subset of the XLP, consumer defensive lah. So from the 18th of August to the 3rd of August for the past 10 years, okay, 90% of the time, which means 9 years, okay, it was down. The food and beverage ETF, same day also 18th to 3rd October for the past 10 years. 9 years it was down. Like for the gold miners, right? Okay, gold miners 18th of August to 27th of September. For the past 10 years, 9 years it was down, and the silver, it is the same, around the same as well. So we can take a look at the XLP over here. XLP. XLP over here. So I've drawn the red dotted line over here. Red dotted line is actually the standard support and resistance area. So this was the prior resistance area. Okay, once price has broken, come back and retest the support again over here. But you need to know that based on price action, the more time, okay, the price is tested at the support, the weaker it is. Okay, this is tested a few times already, is there, but the XLP, okay, this consumer staple can't really, just, rebound from here. You can see there was a very sharp, there was a rebound. There was a kind of a long tail over here. Okay, long tail over here, which means the price rebounded but cannot sustain and come back down again. And last Friday, it was actually a small candle over here. So I'm anticipating that, this coming week, okay, price could come down over here. So the date is actually from the 18th of August, which is this coming Friday. But you can actually, look at it, keep it on your watch list over here. Again, whether you want to go short or not, it is entirely up to you. I won't tell you when to enter, when to exit, okay? But also it tells you, if you don't short, it also tells you to avoid buying the consumer staple or the consumer staple stocks, okay? So I prepared this, okay, the consumer staple XLP, ETF.com/XLP. So at one glance, what are the stocks it comprises? Okay, P&G, PepsiCo, Costco, Coca-Cola, Colgate, Palmolive, Altria, Philip Morris. All these are very, well-known stocks over here. Again, if you don't short, at least it tells you also to avoid all these individual stocks, because these are the stocks that make up the XLP, the consumer staple ETF over here. And then another one that I'm looking at is the PBJ, the food and beverage ETF. This is the weaker one also over here. Can you see that this was the prior support area? Okay, the classical support tested one time here, rebounded, tested one time, rebounded, and this time it is also here. And again, price has been coming down for quite a while already. We shall see how it goes, but I also do not have a position, so we can see whether it can go down lower this coming week or so. Okay, all right, but I'll be more inclined to short the XLP. Okay, I think this had a short rebound, as in a consolidation, a good consolidation. So I mean that looking for price to go down lower in this example for this coming week. So if you want to know what is the component stocks of PBJ, you can also go to ETF.com/PBJ. Let's wait for it to load. As usual, all the data I can, what is it about, can go and read through. But I'm more interested in the component stocks over here. So the top 10 component stock is Archer Daniel, Cordial, PepsiCo, Chipotle, Mexican Goodies, the fast restaurant, Kraft, Hershey, all this one. At least again, if you want to short, it also tells you to avoid all these F&B stocks in this coming week or so, or at least the F&B whole industry, because based on historical data, seasonally, okay, they are weak. Okay, so with that, okay, I think this will be a very short video for this week. Okay, in short, you can avoid the gold miners or the precious metals, and also the F&B ETF, and also the consumer staples sectors. These are the stocks that I'm focusing on. Okay, either you go short or avoid buying them. I think this is pretty simple. So any question, okay, please give me a comment. This is an unlisted video, but you still can give me comments, or give me a like, so that at least I know that you understand what I'm trying to say. You get it in this video. So with that, I thank you for watching. Have a good, safe trading week ahead. See you again next coming week. Bye bye.